Hello viewers, welcome you all to my channel. I'm Hasham. So already 15 problems I have completed on computation of tax liability till the last video. Now this is the last and final video on computation of tax liability. So if you have not watched those earlier videos, you cannot be able to understand these problems. All the problems are based on the theory which I have explained in detail. The starting first 4 videos are very important, where I have explained you in detail regarding what is tax, characteristics of tax, objectives of tax, classification or different types of taxes, canons of taxation, basic concepts, deemed income, exceptions to the general rule. Then I have explained you about the different rates of taxes, slab system, flat rate of tax, casual income, special income, normal income, all these things. Without understanding those concepts, those provisions, you cannot be able to understand the problems. So if you are interested in getting a good command on the subject, watch the first 4 videos. Then only you can be able to understand the problems. Every problem will be a different problem. Problems are based on the provisions of Income Tax Act 1961. So now, before starting the 16th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout, keep it ready. Take a screenshot of the solutions of problem number 16, 17, 18. Then I'll explain all the points. Come on, see the problem number 16. Calculate tax liability of a person on a total income of 16 lakh. Advance tax paid 2 lakh in the following situations. Remember, this advance tax of 2 lakh rupees will be deducted after calculating the tax liability. So what is the total income? 16 lakh. And 3 situations are given. The first situation, if the SSC is a resident male person of less than 60 years of age. Less than 60 means non-senior citizen. Then second, if the SSC is a resident female person of 68 years of age. 68 means senior citizen, above 60 years. Then if the SSC is a non-resident and super senior citizen. So 3 different situations are given. One by one we will solve it. First of all, total income is given 16 lakh, advance tax paid 2 lakh. Case number 1. Resident male person, age less than 60 years. Income tax does not make any distinction between male and female. Both have equal provisions, same provisions. So forget about male or female, simply see age less than 60 years. Non-senior citizen. For non-senior citizen, the basic exemption limit is 2,50,000. Slab system. For normal income, slab system will apply. The slab income rate tax. First slab up to 2,50,000. Up to 2,50,000. 1 rupee to 2,50,000 rupees. The income is 2,50,000 nil. No tax rate, no tax. Second slab goes from 2,50,000 1 rupee to 5 lakh. 2,50,000 1 to 5 lakh. The income comes to 2,50,000. The rate of tax is 5%. So 5% of 2,50,000, 12,500. The next slab goes from 5 lakh 1 rupee to 10 lakh. So from 5 lakh 1 to 10 lakh, income is 5 lakh. The tax rate 20%. So 5 lakh into 20%, 1 lakh rupees is the tax. Last slab over 10 lakh rupees. Whatever be the income over 10 lakh, that will be taxable at 30%. Our total income is how much? 16 lakh. 16 lakh must deduct the first 3 slabs. The first 3 slabs income. First slab 250, second slab 250, third slab 5 lakh. So 250, 5 lakh means 10 lakh over First 3 slabs 10 lakh over. So 16 lakh minus 10 lakh, 6 lakh is the balance. On this 6 lakh, 30%, 1 lakh 80,000. Now take the total, 2 lakh 92,500. 2 lakh 92,500 is the tax on total income. Now tax on total income 2 lakh 92,500. To this, no surcharge because the income is below 50 lakh. No surcharge. No tax rebate will be allowed because the income is more than 5 lakh. No tax rebate, no surcharge. Directly we add health and education cess 4%. 4% of 2 lakh 92,500, 11,700. Add up tax liability 3 lakh 4,200. This is the tax liability. But already the SSC has paid advance tax. How much advance tax? 2 lakh. That will be deducted here. Remember this point. First time we are coming across advance tax. Previous problem we have not covered this point. In the coming problem also, remember always advance tax will be deducted from tax liability. Now tax due is 1,04,200. SSC has to pay 1,04,200 now tax. That's it. So this is the first situation A. Resident male person below 60 years. Now resident female person of 68 years of age. Forget about male or female I told. 68 years means senior citizen. For senior citizen, the basic exemption limit is 3 lakh. Here first slab was up to 2,50,000. Now here the slab is up to 3 lakh. The basic exemption limit is 3 lakh. All these provisions I've already explained in the starting theory video. That's why I'm stressing you. Up to 3 lakh. Income is 3 lakh. Then nil. No tax rate, no tax. Second slab 3 lakh 1 to 5 lakh. From 3 lakh 1 to 5 lakh, 2 lakh rupees is the income, 5% tax, 10,000. Then next 5 lakh 1 to 10 lakh. 5 lakh is the income, 20% is the tax. 5 lakh into 20%, 1 lakh. Now balance. Total income is 16 lakh. From 16, deduct the first 3 slab. 3 lakh plus 2 lakh plus 5 lakh, 10 lakh. 16 minus 10, 6 lakh. 6 lakh is the balance, on which 30% tax, 1,80,000. Total 2,90,000. 2,90,000 is the tax on total income. To this we add health and education cess 4% mandatory, compulsory. So 4% of 2,90,000, 11,600. Tax liability 3,01,600. As usual, advance tax paid 2 lakh will be deducted. Tax due 1,01,600. So what is the difference between first A case and B case? A case non-senior citizen and B case senior citizen. That's it. Now third, non-resident and super senior citizen. See here, for non-resident persons, the basic exemption limit is 2,50,000 only for non-senior, senior or super senior citizen. This point, this is a new point, important point you have to remember. I already have explained the theory. For non-resident persons, we should not see whether he is a non-senior or senior or super senior. For everyone, the basic exemption limit is 2,50,000. Right? So, for non-resident persons, the basic exemption limit is 2,50,000 for all types of SSCs. When 2,50,000 is the basic exemption, what is the tax liability? Already we have calculated here. When 2,50,000 is the basic exemption limit, the tax liability is 1,04,200. Same. So here also same calculations, whatever we have done here, the same calculation is applicable for non-resident. So ultimately tax liability is 1,04,600. Here, the tax due is same, rupees 1,04,200 as calculated in A above. That's it. This is the end of problem number 16. Now, 17th one. For the previous year 2021, Mr. Vasudev Naik's income in India is 7,20,000 and in foreign country is 12 lakh. Calculate tax liability in the following situations. The new point in this problem. The SSC is having Indian income and foreign income. This point we'll discuss more in the coming chapter called Incidence of Tax. There I'll discuss in detail Indian income or foreign income, which is taxable. Normally people will think that Indian income is taxable, foreign income is exempted. Yes, but there are some exceptions. Right now you remember, if his residential status is resident, if a person is resident in India, he is liable to pay tax on both the incomes, Indian income as well as foreign income. But if second one, if his residential status is non-resident, if he is a non-resident, only Indian income is taxable, foreign income is not taxable. Make it a point. If the residential status is resident in India, then he is liable to pay tax on both the incomes, Indian income as well as foreign income. Now, 17th, Mr. Vasudev Naik, Indian income 7,20,000, foreign income 12 lakh, total income 19,20,000. Now, first A case. If his residential status is resident, in this case, he is liable to pay tax on both the incomes, that is Indian income and foreign income. What is the total income here? 19,20,000. So, if the status is resident in India, he has to pay the tax on complete 19,20,000. Right? Slab. First slab. Age is not given. So, we assume non-senior citizen below 60 years. Always remember, if age is not given, we assume that the SSC is a non-senior citizen below 60 years of age. So first 2,50,000. Up to 2,50,000, income 2,50,000, nil, no tax. From 2,50,001 to 5 lakh, the income comes to 2,50,000. 5% is the rate of tax. So 5% of 2,50,000, 12,500. Third slab goes from 5 lakh 1 to 10 lakh. So 5 lakh 1 to 10 lakh, 5 lakh is the income, 20% is the tax. 1 lakh. Now balance. The over 10 lakh rupees income, that is taxed at a flat, that is taxed at 30% rate. So what is the total income? 19,20,000. From 19,20,000, deduct the first 3 slabs, that is 2,50,000, 2,50,000, 5 lakh. So total 10 lakh. So 1920 minus 10, 9,20,000, 30%, 2,76,000. Take the total 3,88,500. This is the tax on total income. No surcharge because the total income is below 50 lakh. No tax rebate because income is more than 5 lakh. So directly health and education says 4%. 4%, 15,540, tax liability 4,04,040. This is the first case where the SSC is a resident in India. B case, it is given SSC is a non-resident in India. Only Indian income is taxable, foreign income is not taxable. For whom? Non-resident. If his residential status is non-resident, in this case he is liable to pay tax only on Indian income. Foreign income is not taxed. How much is the Indian income? 7,20,000. So he has to pay the tax only on 7,20,000. Up to 2,50,000. 2,50,000 is the income, nil. From 2,50,001 to 5 lakh. 2,50,000, 5%, 12,500. Third slab goes from 5 lakh 1 to 10 lakhs. But his income is not going up to 10 lakh. His income is only 7,20,000. So we'll take the balance. We will not take 5 lakh 1 to 10 lakh. Earlier we were taking because the income was more than 10 lakh. Here it is less than 10 lakh. So third one balance. So 7,20,000 minus 5 lakh. First to 2 slabs 5 lakh. So 2,20,000, 20%, 44,000. Take the total 56,500. 56,500 is the tax on total income. To this we add health and education says 4%. So tax liability 58,760. That's all. This is the end of 17th problem. So every problem you are coming across a new point. So focus on that new point. Next, 18th. Income from short-term capital gain on transfer of listed equity shares, 3,50,000. Remember, short-term capital gain on transfer of listed equity shares is taxable at a flat rate of 15%. Already I told you in the last theory videos. It's a special income. Short-term capital gain on equity share is a special income on which 15% flat rate of tax. And income from other heads 1,10,000. Income under other heads means normal income. The normal income is 1,10,000. Special income is 3,50,000. Calculate tax liability in the following situations. Three situations are given: A, B, C. A. SSC is a resident male person. Second, SSC is resident super senior citizen. And C, SSC is a non-resident woman. So three situations we have to compute the tax liability. Here again new point is given. Income under other heads is normal income, which is only 1,10,000. Actually, the basic exemption allowed is 2,50,000 for non-senior citizen. But here the income is 1,10,000 only. So there is a deficiency. So how to calculate, how to compute the tax liability? Carefully see here. First, income under other heads 1,10,000. Short-term capital gain on transfer of equity shares 3,50,000. This 3,50,000 is a special income, 15% rate of tax. Now, resident male person. The basic exemption is 2,50,000. When age is not given, we assume non-senior citizen. Basic exemption 2,50,000. But income under other heads is 1,10,000 only. So deficiency comes to 1,40,000. 1,40,000 is the deficiency of basic exemption. Income Tax Act says this deficiency can be deducted from special income. Deficiency can be deducted from special income. Which is the special income? STCG. STCG on shares 3,50,000 minus deficiency 1,40,000. So taxable STCG is 2,10,000. So STCG taxable 2,10,000. The rate of tax 15% flat rate of tax on STCG on sale of equity shares. So 15% of 2,10,000. Less tax rebate because the SSC's income is below 5 lakh. See here. 3,50,000 plus 4 lakh, 1,10,000, 4,60,000. It is less than 5 lakh. So SSC can get tax rebate under section 87A. How much? Least of the following two. Actual income tax or 12,500, whichever is least. The actual income tax is 31,500 or 12,500, whichever is least. So 12,500 is least. That will be allowed as reduction. Deduct 19,000. Health and education says 4% of 19,760. Tax liability 19,760. This is first A bit. Resident male person. Now second one, resident super senior citizen. For super senior citizen, the basic exemption limit is 5 lakh. 5 lakh is the basic exemption limit. Whereas income under other heads is 1,10,000. So deficiency is 3,90,000. Deficiency is 3,90,000. This deficiency can be set off from special income. But special income itself is 3,50,000 only. Can we set off the complete deficiency? No. Out of 3,90,000 deficiency, only 3,50,000 income is there. The deficiency fully cannot be set off. No income. 3,50,000 minus 3,90,000, you will get minus 40,000. That means deficiency is more than special income. So no taxable income will be there. When no taxable income, no tax. Tax liability is nil. This is the second case. Now third case, SSC is non-resident women. Now Income Tax Act says this deficiency set off provision. Deficiency can be set off from special incomes. This provision is applicable only for resident persons. For non-resident persons, this deficiency provision is not applied, is not allowed. Deficiency is not allowed. So, if the SSC is a non-resident women or men, doesn't matter, non-resident. Non-resident means the deficiency should not be calculated. Income under other heads is 1,10,000, whereas basic exemption limit is 2,50,000. So no deficiency to be calculated. What is the other income? Short-term capital gain. On this short-term capital gain, tax will be applied at a flat rate of 15%. So adjustment of deficiency in normal income is not allowed for non-resident persons. Clearly given. Now, normal income 1,10,000 less exempted income is also 1,10,000. Exempted up to 2,50,000. But here income is 1,10,000, so deduction is also 1,10,000. Taxable income nil. The normal income is nil. Now special income. Short-term tax on STCG, short-term capital gain, 15% of 3,50,000, 52,500. Add health and education cess, 4%, 2,100. Total is 54,600 is the tax liability. That's it. This is the end of 18th problem. Come on, 18th problem we have completed. Now see the 19th problem. Sri Rangan Shettyar inherited a landed property from his grandfather in 1999. During the previous year relevant to the current assessment year, he started constructing the house on this land. So here the assessee is Rangan Shettyar. So he inherited some ancestral property from his grandfather in 1999. But during the current previous year, the current assessment year is 21-22. Current assessment year. Whereas the previous year is 2020-21. 2020-2021, that is the previous year. So during the previous year, he was digging the earth because he wants to construct some building on that land. So during the process of construction, while digging the earth, he found a box containing gold and silver ornaments worth rupees 15 crore. He has not earned any income. But while digging the earth for construction purpose, he found a box containing jewelry, gold ornaments, silver ornaments, worth rupees 15 crore. Now what is the provision of law regarding this? Determine the tax liability for the current assessment year, assuming that he is not having any other source of income. He does not have any other income. Only this 15 crore rupees he got from the earth while digging for construction, right? So what is the rule? What is the law regarding this, this money which is found, this wealth he found? So according to Supreme Court judgment, this type of case has arrived before the court of law. So according to Supreme Court judgment, any article found underneath the earth, if a person has found any wealth, articles underneath the earth, then the ownership of such items lies with the owner of the land. That is the main point you have to remember. The owner of the land, he is the owner of that wealth, and not with any other person like lessee or the government. The government cannot take over. It is the property of the owner of the land. So here Rangan Shettyar is the owner of the land. So this wealth belongs to him only. The government cannot take over. The lessee cannot take over. If there is any lessee, he also cannot take over. The value of the jewelry is treated as casual income, unexpected income, element of chance. So it will be treated as a casual income and taxed at a flat rate of 30% as usual. The value of the gold and silver ornament worth is 15 crore. 15 crore. That is the value of the jewelry. So how to compute the tax liability? 30% of 15 crore. It comes to 4 crore 50 lakh. 4 crore 50 lakh is the basic income tax. Now surcharge is applicable because the income is more than 50 lakh. Now different surcharge rates are there: 10%, 15%, 25%, 37%. The 37% surcharge will be applied if the total income is more than 5 crore. Already all these things I have already explained in the theory video, and also last few problems we have applied the surcharge. So remember the provisions of surcharge. If the total income is more than 5 crore, the surcharge rate is 37%. Here it is more than 5 crore. It is 15 crore. So surcharge rate 37. 37% of 4 crore 50 lakh. It comes to 1 crore 66 lakh 50,000. Now add up 6 crore 16 lakh 50,000. To this, as usual, health and education cess 4%. So 4% of 6 crore 16 lakh 50,000, 24 lakh 66,000. So ultimately the tax liability will be 6 crore 41 lakh 16,000. That's it. This is the ultimate tax liability of Ranjan Shetty. That's it. This is the 19th. Now last and final problem, 20th. Problem number 20. Sri Suchinivas Mirdha, resident of Varanasi city of UP, reported the following incomes for the previous year 2021. Calculate the tax liability. So here different incomes are given. Income from business 3,21,000. Winning from horse races 6,000. Short-term capital gain taxable at a flat rate of 15% 90,000. And income under other heads 62,000. So 4 incomes are given. If we scrutinize these 4 incomes, we can find 2 incomes are normal incomes and 2 incomes are special incomes. The normal incomes are income from business 3,21,000 and income from other head 62,000. So 3,21,000 plus 62,000. These 2 are the normal income. And special incomes are short-term capital gain at a flat rate of 15%. When flat rate is given, it is a special income. Similarly, winning from horse races, that is a casual income, flat rate of 30%. So totally 4 incomes. Now how to compute the tax liability? See here. Normal income, income from business 3,21,000, income from other head 62. Total 3,83,000 is the normal income. On normal income, we apply slab system. Then special income. Short-term capital gain 50% flat rate is 90,000. Winning from horse races casual income, flat rate of 30%. The amount is 6,000. Now we compute the tax. Tax on normal income, slab up to 2,50,000. First slab up to 2,50,000, income 2,50,000, nil, no tax. The second slab goes from 2,50,000 1 rupee to 5 lakh. But is our income 5 lakh? No. Normal income is only 3,83,000. Less than 5 lakh. So we'll take the balance. We'll take the balance. So 3,83,000 minus 2,50,000. The balance come to 1,33,000. This will be taxed at a flat rate at a rate of 5%. So 5% of 1,33,000, 6,650. 6,650 is the tax on normal income. Now we calculate the tax liability. Tax on normal income 6,650. Now tax on STCG, short-term capital gain, 15% of 90,000. 13,500, total 20,150. Now from 20,150, tax rebate under section 87A will be allowed because the income is below 5 lakh. The income of the person is below 5 lakh. But tax rebate will be allowed only from normal income and special income, not from casual income. From casual income, tax rebate will not be allowed. So we will deduct the tax rebate under section 87A, 12,500. What is the rule regarding tax rebate? If the income is below 5 lakh, then tax rebate will be allowed to the least of the following 2. Actual income tax or 12,500, whichever is least. So actual income tax is 20,150, whereas the fixed amount given by the Income Tax Act is 12,500, whichever is least. 12,500 is least. Deduct 7,650. To this we add tax on casual income winning from lottery, 30% of 6,000, 1,800. Add up, you get 9,450 is the tax. To this we add, as usual, mandatory health and education cess 4%. So 4% of 9,450, 378. Add up, the tax liability comes to 9,828, 9,828. But rounding off provisions will apply. The income tax should be rounded off to the nearest 10. Last 28 is there. 28 is there, make it 30. Next 10. So 20, 30. So 20 we cannot make because 8 rupees is there. If 5 rupees or more than 5 rupees are there, next 10 you should take. The next 10 is 30. So 9,830 is the tax liability. That's all. Totally 20 problems. 20 problems I have explained regarding the computation of tax liability. So if you have watched all the 20 problems, definitely you can be able to get a good grasp on the subject of income tax. What I have heard, that students will find this subject very difficult. Not at all difficult. Some extra effort you have to apply. Concentration you have to apply. Main thing is you must have the interest to learn. If you're just thinking just to pass the examination, that means easily you can pass, but you cannot get the hold or the grip on the subject income tax. It requires some patience. So this, I am applying my whole effort in order to explain each and every point. Hope you are understanding all my lectures. If you are satisfied with my lecture, give a like to the video, share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Do subscribe my channel and give your comments from which university you are pursuing your studies and how these lectures are beneficial to you. Apart from that, I have started a new channel by name Hans Accounting Institute. Second channel. The link is given in the description. So visit that channel also. Particularly that channel is meant for IGCSE students, those who are pursuing Cambridge and Edexcel, Pearson. But the videos are very much knowledgeable for everybody. So do visit the second channel and subscribe that channel also. Inshallah, we'll start the next topic of this income tax in the next video.